Hi, all, and welcome back to a brand new Imperial Wealth and Mining Store podcast. This week it'll just be Taylor and I, your finest BTC Maxis, giving you a rundown of the FTX situation mainly and the news surrounding those events and what it's meant for the cryptocurrency market. We might touch on some other things and we'll take a quick look at a couple of BTC charts and yeah, should be a nice and short one. I apologize if my mic is a bit low. The recording software likes to put it a bit quieter than Taylor's overreaching voice, so make
I'll
sure
try
you
and be a little bit more quieter for you.
make sure your volume is up nice and high if you can't hear me. So yeah, we'll crack into this. We will firstly start off, I guess, with talking about the FTX situation. It was a bit of a messy one. Really, we've got three articles here from members in the Trading Academy. You guys have seen these before. You can read these. If not, you can go to our Imperial Wealth news section up here. People who aren't members can still view that, and you can take a read about kind of what's occurred over the last week or so.
Absolute
Um,
sale.
but yeah, so really, Taylor, the easiest way to kind of describe this, isn't it, is that the FTX empire, which was once very bold and very large, has come crashing down quite quickly, hasn't it? And brought a fair bit of
Yeah,
pain with it.
I think it's been quite an interesting sort of fortnight in that regard as well. Like a lot of rumblings, sort of the week prior of things starting to move, and particularly the week following, everyone talking about balance sheets and whatnot, and where cold wallets are stored and everything. So I think this has just sort of unravelled pretty quickly.
Yeah.
But I've found it truly fascinating
Yeah.
how something so succinct in the crypto industry, and obviously something that's got such a large media footprint. Numerous deals with Staples Center and whatnot. So it's pretty interesting to see how much your marketing
Yeah.
doesn't really justify.
Yeah, for you, fair few celebrities tied up, isn't it? What was
Mm.
it? Tom
Yeah,
Brady? Was
Tom
it
Brady.
Steph
Who's the other
Curry?
one?
Maybe.
Yeah, Steph Curry. Yeah, yeah,
Yeah, I think there was a few of them, and then even
yeah,
what there was Bill Clinton involved. There's the whole
yeah.
Democratic Party tying in. We're seeing plenty of conspiracies and rumors about Sam and his dealings and his mother and his
The Ukraine
girlfriend.
one looks interesting. I'll give it that. It's pretty ironic how that website URL changed within about 24 hours of everything falling over.
Yes, yes. But anyways, we do have a small little breakdown here that was taken a bit from the Guardian. But yeah, essentially to give a quick rundown to those that didn't happen, I'm sure most people that watch this do know what happened. But essentially, there were rumors and conspiracies initially that they were over leveraged. They'd had way too much of their own native token on their balance sheet. Um, there was a few things from 2021 that's coming out that that's where the leaks started to appear, and really this is what sparked CZ and Binance coming out and saying I think they had what it was a $500 million position in
Yeah,
FTT or so.
which
I
they
think
kept as well.
yeah, and he came out and spooked the market and kind of spooked everyone else. Whether you want to think he's the villain or not is a different conversation. But I
Mm.
guess yeah, in his own words, it was post Luna risk management because he kind of stuck fat with Luna and Doe and tried to help out as much as he could there, and it ended up just really shafting them as well, I guess. So it wasn't personally, in my opinion, the wrong call from CZ. Might have probably gone about it a bit differently rather than so in a public forum to maybe because obviously when there's smoke there's fire, but maybe he was the one that lit the match or added a bit of gasoline to the fire or so. But
100%.
yeah, it got messy when obviously they came out and said their assets were back 1 to 1. We don't use client deposits elsewhere. There was a lot of denial that came obviously unraveling in about 24 hours. Once I think it was 6 billion on the Sunday was withdrawn from FTX in client deposits, and it really the what their dealings were on their balance sheet, the holes that were there, and obviously the uncertainty in their sister company Alameda Research and their investments and all the different shell companies and where this money had gone had really caused everyone to withdraw their money and eventually caused the breakdown of FTX. Um, and yeah, really, really sad to see because it probably does do a bit of damage to the industry in terms of mainstream adoption. we were getting, it grows exponentially, cryptocurrency, and it has been over the last few years. But this is, in my opinion, most definitely the worst black swan event to have occurred in the cryptocurrency history. I think it's 5 to 10 times worse than Luna.
Oh,
Um, Given how big FTX were, given the partnerships you speak of, given how mainstream they were, and then obviously the flow and effects that this will have now on other projects, other exchanges, even just retail investors wanting to come to the industry, and those that lost a lot of money coming back.
100%. And like I think it's a really pivotal point that when you look at it, I guess from an economical point in the sense of the market, investors might necessarily understand a token being collateralized and obviously going down considerably, e.g. Luna, but something like an exchange that retail investors see as this bank-like figure
Mm.
going under really it puts shivers down their spines because they think it's safe.
Yeah.
You know what I mean? Like even I guess we'll touch on it later. Like people that put money in exchanges, even in Australia, and can they're regulated and all this sort of stuff. There's so many loopholes that make them not.
Yeah.
So
Yeah, and I guess it's a great point you bring. Hopefully, people regulation is a it's an iffy subject in cryptocurrency, but ultimately we do want regulation because
oh,
it brings
absolutely,
more people to the space, it brings more institutions, it brings more companies, and overall it's healthier for the industry. So things like this actually can't happen
yeah,
ultimately as well. But we will touch on a few of those things. I will just scroll down a bit. Yeah, I talk about here, the scale of this, and how it dwarfs any of those projects, and the contagion of this can spread much
mm,
further, and we may be in for a rough ride for the next couple of months, but we always do come out better on the other side. Before we continue, yeah, I think it's best we touch on a few different things that people can learn from this, and obviously
mm,
the number one thing that I think is a takeaway from this is the overall goal of cryptocurrency and blockchain technology is decentralization. And what people need to realize is, as sad as it is, this is a centralized actor that's doing the damage.
mm,
These are centralized exchanges and centralized entities that are really hurting the industry, um, which is backed up by what I'll talk about soon. But um, there's been a crazy amount of BTC. I think it was a record in BTC's history of
yeah.
outflows of BTCs from exchanges. I think it was around 70.
73,000 or something.
Yeah. I can show this. Sorry, just here. Yeah, so we had a kind of blah blah blah. Yeah, so you can see here in this image right here, 73K, and this really steep little thing here left the exchanges. It was a similar thing with ETH here,
Mm,
over a million worth of ETH left exchanges, and then obviously in contrary, stablecoin volume increased as well as DEX volume, which I actually want to talk about because people often think you have to hold your coins or you can only trade on centralized exchanges, whereas you can actually do that on decentralized exchanges, which are actually safer. Obviously, the point there inferred is you got to choose the right decks. You don't just go to any random smallish, maybe risky looking decks. There's heaps of ones like GMX amongst others that are really stable and very popular, and you can use those. And then, more importantly, the lesson here for everyone is what I sent out to members and we mentioned in Discord is, not your keys, not your wallet,
yeah.
or not your keys, not your Bitcoin. And I still see people asking me, even I sent out messages about different exchanges that might look a bit worrying at the moment. All exchanges really are, and I had people saying, okay, well, I'll take it out of this exchange, and is it okay if I put it on this one? And that's not the point of this. The point of this is when there's smoke, there's fire, and in cryptocurrency, if you notice any risk that is any risk to your cryptocurrency holdings, you should be locking it away in cold storage on a ledger.
But and that's like to me, we sent out that message the other day to people saying, look, it's probably wise to make sure that you're not on so exchange or really any exchange.
Yeah.
And it amazes me how people leave. It could be $5, could be 100,000, could be a million, who knows, right? But on an exchange for no reason.
For no
If
reason.
it's not staked or something like that, then what is the point in having it there?
Yeah, there's no point.
Complete
And
risk.
that's the thing. Don't hold things blindly just
Mm,
because you're lazy or you think it's safe. Like, going back to the point of, you shouldn't believe what exchanges say. And like we said, FTX came out and said, we have everything backed one to one.
Mm.
And I had someone message me when I mentioned a different exchange saying, "Oh, no, 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 I'm not withdrawing from there. That's fine. They said their assets are back one to one."
Yeah.
I said, "Yeah, FTX said the same thing, and so does everyone. They need to, or else no one will use the exchange." And a good point to raise, and the best part, well, not the best part, but the main sticking point of FTX falling is no exchange is too big to fall. That's what
Yeah.
people need to understand now. It does not matter if the exchange you use is the biggest, is Binance,
FTX
or
was easily top three.
yeah,
Easily.
yeah, yeah, yeah.
Yeah.
And yeah, just avoid risk really. When there's smoke, there's fire. Trade on dexes, not sexes.
And like
Hope you
even
pick.
when you think about it in regulation sense as well, FTX Australia is still going under and all their funds are locked.
Yeah,
So
and I think the best thing to say is here, act fast. People see things on Twitter. As soon as you see smoke, act fast. Move your. If you've got stuff on there, move it off. When there's smoke, there's fire. People would have seen the FTX stuff for 2 to 3 days before, or maybe even longer, 4 to 5 days before things really started to turn and go under.
100%. And our client, I think it was literally yesterday, the day before, he was saying, I didn't move it because it was like, a half a percent or a 1%
Yeah.
transaction fee. And I sort of, I bit my tongue a little bit being
Yeah.
like, okay, so you would rather lose 100% than lose, half a percent or point 0.6 or whatever it is.
Yeah.
Like
Yeah.
there is a limit. And I feel like people have to understand that the security when it comes to certain things, this is money, yeah. It's obviously tokens and whatnot, but at the end of the day, this is savings. This is, if you're buying particular things at the right time, generational wealth opportunities.
Yeah.
So keeping it safe and something as simple as like a ledger or a Trezor or a MetaMask or whatever, even a trust wallet, anything like that is the ultimate goal, right?
Yeah. Ultimately, yes, definitely. Um, But yeah, just moving on and continuing that. That's got a bit of information if you want to pause the video on the collapse and the uptick in stablecoin inflows and DEX activity as opposed to BTC and F leaving exchanges. I did want to just bring up here this point here because it's good. We love the El
Yeah,
Salvador president. He's probably the biggest BTC maxi of us all, really. But he made a good point, and I thought I'd include this because I actually personally believe as although this has damaged the cryptocurrency industry as a whole, most definitely
yeah,
it actually bolsters the case for Bitcoin. Because Bitcoin is not centralized like an exchange is. It is not a Ponzi scheme like FTX was. You get your own self custody on Bitcoin. You can have Bitcoin, trade it peer to peer, and have it in your cold wallet with no centralized or third party stuffing your funds, withdrawing it, and putting it elsewhere into yield
yeah,
farming.
exactly. Yeah,
Um, and this is what he says here. He says FTX is the opposite of Bitcoin, and he explains the inner workings of the Bitcoin protocol, highlighting the white paper, and pointing out the immutable peer-to-peer network and how it's a trustless financial system. Whereas using a centralized exchange is not trustless. You are trusting essentially another bank such as NAB, Commonwealth, or ANZ with your funds. And as me and you discussed the other day, that is what banks do. To much people's surprise, what
yeah.
FTX, and not in the same probably manner or same light, but
Mm.
in
It's just
essence,
a shuffleboard,
yeah, exactly. Um,
except they'll get bailed out by the government,
yeah.
whereas foreign exchanges won't. So
And yeah, I guess yeah, you can see obviously the opening to the Bitcoin peer-to-peer electronic cash system white paper here, but yeah, he does make a point about reiterating that Bitcoin has a limited market capitalization of 21 million. Obviously, FTT and other tokens can just be printed out of thin air to make these type of situations happen. And worst part of this all is you would have hoped after Luna, 3AC, and other Black Swan events that people would learn, such as SBF and whatnot. But unfortunately, in all industries, there's always going to be malicious actors. You just got to take the good with the bad, I suppose, and understand that most people are trying to build and prosper this industry as best that they can.
yeah,
Yeah.
exactly right.
Alrighty, well, we can quickly move on to some Bitcoin charting, I figure. I think the most important thing to talk about right now is not the Bitcoin and the cryptocurrency charts from my end, as it's quite hard to navigate your way through a black swan event technically
Mm.
charting when, we could wake up tomorrow and, as an example, Binance goes under. Binance isn't
Yeah.
going under, everyone, but you
Yeah.
can imagine what would happen to the market if that did happen.
Mm.
So yeah, I thought I'd just instead run over some technical analysis on the DXY and the stock market. So obviously last week we had the CPI data come in really nicely, and I think it was 7.7%, was it?
Yeah, 7.7, and I think expected was like 8.2 or something, wasn't
Yeah,
it?
so it was 0.5% under, which was,
Yeah, massive.
massive. So we saw a reaction in the DXY here, as you guys can see. I'll open up that chart here. We have the 2022 kind of uptrend line that
Mm.
got seriously broken, and we've had, a couple of daily red candles down to,
Decent reversal for
yeah, a decent
sure.
reversal. And I just want to show down the bottom here, we looked to get, because MACD came down so hard, you can see we
Mm.
went to get a bullish MACD crossover, and it just rejected it hard. And we've continued to fall, which is, fantastic, because as we always discuss, in for cryptocurrency to prosper, it's actually got an inverse correlation to the US dollar and the DXY. So, interest rates hikes beginning to stall, or, beginning to lower, will provide relief in the DXY and ultimately relief in the stock markets and the cryptocurrency market.
Mm.
Um, of course, I've shown this in the past, I think on the podcast and then in post, but on the weekly USD chart, we actually have a bearish bat harmonic. And, I sent that when we hit the top up here, and you can see it's starting to reverse. And, hopefully, the uptick that we've had in the DXY since 2008, hopefully we can start to see a reversal over the next few years, which would be great.
Mm.
So, as a result, the S&P, we sent out, I showed this on the podcast as well. We had a head and shoulders pattern that played out pretty much perfectly all the way down to this huge line of support. I showed this a few times as well. And given the CPI data and the bullishness in the stock markets and macroeconomics right now, we've bloody bounced off it nicely, and now trading at the 4K resistance mark, which is really good for the stock markets. And yeah, ultimately, it's so unfortunate we had this black swan event, because, as Taylor and I were discussing before, as a technical traders ourselves and with our trading academy, we tried to meticulously plan for buying at certain points, and, we were looking really, really good. And then the black swan event happens, and it kind of crushes a lot of traders' technical ideas, which we had for, kind of a midterm rally off the back of CPI data coming in well towards the end of the year, a potential interest rate pivot, which it looks like it can happen if CPI data continues to come down. And yeah, it's a bit unfortunate that it got in the way of things, but things are looking good. If the momentum can continue, if the boil over of FTX does past us, cryptocurrency can then begin to move the same as the stock markets and wider financial markets. So yeah, let's hope. But we obviously have to wait, I think, a couple more months to really see where this is heading, this situation, and whether we get some clarity on price action and, a bit more bullish market structure, which gives us confidence in entering the market. So we'll quickly look at BTC quickly. I actually sent out this update yesterday to members, so I briefly took a look at the 4-hour price action in this current range. I said we were currently perfectly rejecting at the local point of control. But yeah, the structure of this Fibonacci retracements here is quite good. You can see multiple rejections off the golden pocket that we were holding as support. We were holding the POC as support once upon a time. We lost that, perfectly retraced to the 886, bounced off there in one godlike 4-hourly candle,
Mm.
rejected at the POC once again, traded at the golden pocket, and then we're trading at the POC once again. And then this morning, obviously this chart updated because I sent it out yesterday. This appears as this now. So we flipped the POC to support. We're now starting to close a few 4-hourly candles above, which is great. So I've made that comment here. We've actually flipped the POC. We've obviously want to close maybe daily candles above this, or a few more 4-hourly candles.
Mm.
And, if so, in the short term, I sent this out yesterday saying, if we do flip this to support, maybe we could push up to the local golden pocket and maybe reject from there. Obviously this looks like this now. We have flipped the POT to support. We've kind of closely moving our way up there, but we haven't yet. So that'll obviously, that's just for short-term traders if you wanted to know any movements on demand and supply right there in the short term. But yeah, at the moment, I just will refrain from any long-term chartings for the time being on the podcast, because
Settle first.
yeah, we probably want to wait for a bit more price action and
Mm.
capitulations and falls out from the black swan. before you really decide to start putting capital elsewhere, or shifting, or selling, or buying, or whatever decision you want to make. You really want clarity and a bit more price action to develop, so you can get a better idea technically of where we sit once this black swan settles. I do have an interesting bottom chart. I think I did send it to you, Taylor. My log chart of the Happy New Year's bottom. I won't bring that up to.
That one.
No, we won't show that one, but I might show members that one down the line if they're brave enough. But yeah, I think that's it. Do you have anything else, Taylor?
No, I don't think so. I just think, reiterating the points of what's going on, obviously make sure you're not on an exchange.
Yes, yes. Don't
Okay.
hold blindly. Don't believe what exchanges say. Move it to cold storage. Act
Mm.
fast, and always have liquidity. They're my 5 points. Alrighty, well, thanks, guys. I think we'll be back next week with a more
Yeah,
deep dive podcast that'll look a bit more at DeFi again, upcoming DeFi course, a few plays we've been doing, rather than a
100%.
market analysis update. But yeah,
Yeah, if anyone's interested in looking into anything at the moment, now is obviously the best time for it. It's ironic, and it is. We've been saying that for the last 6 months, but in 12 months, we'll be saying you've missed the boat. So
yeah,
DeFi is obviously one of the best ways to obviously use some liquidity at the moment and get some decent returns considering what's going on. So if anyone wants to have a chat about that, or even discounted miners, feel free to reach out to either me, Theo, or Will, or whatever. There's obviously always opportunity with events like this. There's a few FTX specials going on, so reach out.
yes, yes, perfect. Alrighty, well, we'll stay in touch, everyone, and we'll see you next week. Thank you.
Awesome. Thanks, guys.